So, when you're thinking about whether or not it's a good time to buy property right now as an investor, an upgrader, or a first home buyer, yeah, it's important to understand the rules of the game, where interest rates might be going, and the impact on property values. But it's equally as important to understand the sentiment, not just yours, but the collective sentiment in the market. That's why sometimes I want to talk to economists to understand the rational, but then also people more aligned to the marketing side to understand how people are thinking and feeling right now. So today I'm catching up with the spokesperson at realestate.co.nz, Vanessa Williams. It's going to be a really interesting conversation, having a chat about her own experiences and her perspectives on where sentiment is heading in New Zealand right now. Hope you enjoy. Let's get started. How are you?
I'm very well, thank you. I mean, it's warm today, but
It's very warm today.
spring, hey?
Yeah. Bring on the spring, bring on increased property activity, right? Are we going to see a decent boom to the property market this year in New Zealand? Or do you feel that, given where we've come from as a nation, do you kind of see that property might be a little bit subdued this year, this spring?
Yeah, gosh, it's been a fascinating couple of years. I mean, if you had have said what we've seen in the last, especially even the last 7 or 8 months,
Yeah.
would we have seen such a flat market? I would have said, no, surely we're out of that crazy COVID bubble, but perhaps we're still seeing the end of that burst. Now, what we are starting to see is there is certainly a level of activity that is ramped up, especially this September moving into October, which is really promising. Now, what I mean by that is the number of agents out preparing a number of proposals because vendors in the market are really considering moving at the moment. And, like that is pretty typical. Our business or the real estate market, it moves in 4 months of the year, believe it or not. October, November, February and March.
Yeah.
That's when majority of the business is done in our industry. And, we were talking earlier, why not, right? The blooms are out. It's warm. It's, lighter. So, we see quite a lot of transactions typically happening. Now, at the moment, we're starting to see a lot of listing stock. Whether those convert into transactions is yet to be seen.
And winding the clock back. So if we think about COVID, March of 2020
Mhm.
onwards, easy, cheap, abundant money,
Mhm.
property boom, inflation boom, high interest rates, lower property prices. And then we had roughly, you were saying before, about 3 years of fairly flat property prices.
Yeah.
And adjusted for inflation, obviously that's quite deep and dark hole that we all fell down. Do you kind of feel like the general mood around property has changed? Like, do you think that as soon as the sun comes up like it is right now, and as soon as interest rates drop and there's a bit more optimism out there, do you kind of feel like people will start to get on the bandwagon again, just like they were before, and it'll be business as usual? Or do you think this time it's different?
I think we've got quite a few competing factors here. I do not think people in New Zealand are feeling safe about their jobs. And despite how cheap money is, if there's any inkling of, is my job safe, or the unemployment rate is at it's the highest it's been, I believe, since early 2020, since we were going through that COVID piece, just over 5%, I believe, 5.2 for the last quarter. So that makes Kiwis very nervous. What I will say is, doing this job for over a decade now, Kiwis don't like to transact under uncertainty. I think we've not only got that unemployment uncertainty, we have got a huge technological revolution happening at the same time. Like, what does AI mean? Is that going to take away my job? What's happening in that space? And you look at the geopolitical landscape, man, that's not very nice, is it? We've got 130% tariffs from the US happening on China now. What does that mean for us? So I would say there's a lot of people at the moment who are not quite sure what to make of all of that. And part of that uncertainty does trickle down to going, am I going to make one of the biggest transactions in my life? You're probably just going to take a pause, as much as you might like to or might even need to. I think there is a lot of Kiwis out there who are going, what does this all mean for me? I'm just not quite sure, so I might let it slide. I might let it sort of wait it out a bit.
Sure.
And I do think the OCR cuts will absolutely help with that confidence, that prosperity within the property market. But there's still a lot of factors that are probably causing caution, I would say, in our property market. I don't think we're going to see the boom that we saw post-COVID, sort of, when we were all cheap money and couldn't fly anywhere. What do Kiwis love to do? Buy houses and fly places when you can't
Take away
fly
one,
places.
you're the other. Yeah.
So very true. So, I don't think we're quite going to see that as impactful as it did during that COVID period. I think we'll probably step into this next lift in the market quite slowly and cautiously.
Okay, that'll be interesting, and it makes sense that going back to the uncertainty thing that you were mentioning,
Mm-hmm.
because if I was to think about what's happening in the world right now as myself,
Mm-hmm.
I would probably interpret it a little bit differently than somebody who is buying their first home.
Mm-hmm.
And so I know at the moment, first home buyers are fairly active, right? Like
Yeah.
26% of the market, roughly,
Mm-hmm.
first home buyers,
Yeah.
whereas normally it's about 21 to 23, I think it was.
Yeah. Yeah.
So do you think that first home buyers are just too busy on TikTok or something like that? Forgive me, first home buyers, for being like general there, but do you think that they're kind of they're just busy living their lives? Blissful ignorance, do you think? Is that why they're getting out there and getting it done, or is it pent up demand?
I think that there is that segment of the market, and we sort of talk about that first home buyer sort of home, is typically snatched up by the likes of investors. So when you go to an auction, let's say pre the not the Overseas Investors Act, sorry, when the LVRs changed
Yeah,
and the bright line test changed, and I know that's all kind of
the
been
tax
reversed
changes.
now. Yeah,
Yeah.
the tax changes, of course. When you started to see that shift, we actually saw a big surge in first home buyers because they're like, this is actually now my time,
Mm.
because the demand had dropped off from investors and we started to see them rise and lift. I would say that, when we look at first home buyers, I think that everybody in New Zealand still is very much in our DNA that property is the be all and end all is the wrong words. It's property is really in our DNA. We love to talk about it. We love to understand it. I have the privilege of looking at our Facebook, Instagram accounts on realestate.co. The amount of people are messaging and go, I can't wait to buy my first house. It's still very much in our DNA. And some people see it as very much an investment option as well.
Mm.
So I would say that drop in demand from investors has driven that activity by first home buyers. I would also say that in the last couple of years as well, if you had any kind of money in the bank, you were getting some decent returns on it too. So it might
Yeah,
have
that's
just
right.
supercharged that ability because you've seen your nest egg jump up, ready for purchasing a home, but also the prices have remained the same. So if you have had the privilege of a salary increase in that time as well, perhaps it was that perfect storm to be able to go, great, now's our time to get on the property ladder.
Yeah.
And I think there's probably a bit more hope perhaps in
Yeah.
the younger generation than there is for some of us
Yeah.
older people.
Yeah, that's right. There is no hope for us. It's all downhill from here. No. It's kind of like the wildebeest coming down to the watering hole when the lion's not around, right?
Mm-hmm.
When the property investors aren't around, gobbling up the same stock that they're competing for, naturally they feel like the coast is clear and they don't feel the pressure.
Mm.
Because it was quite noticeable, probably from 2020 or end of 2020 all the way probably to the end of 2022. It was quite
Mm.
noticeable, this FOMO, fear of missing out, just this paranoia that they're never going to have a chance again, and it's only upwards from here. I
Yeah.
guess that is symptomatic of the boom phase of any cycle, right? Where it's just not going to come down. But the train does slow down and stop at a station every now and then, is what I'm kind of learning.
Absolutely. And in this particular case, it did go down. So
Yeah,
for the first time in, like in New Zealand property history, actually,
yeah,
to see us jump up 18% in one year and corresponding 15% drop the following year, like we've never seen anything like that. So as far as records that I can find anyway, of that significant amount of drop from when you look at it over time, it's still actually a beautiful line that,
right,
has a lovely gradient across it, but
yeah,
there's just this massive spike in the middle there, which was caused by that really low interest rates. We had Kiwis not being able to travel anywhere. They couldn't get any luxury cars. I mean, I think we brought all those up as well. And so there was this real,
caravans,
yeah,
yeah, boats.
exactly. Yeah, boats, everything. So look, I do think that, yeah, you are right that it has actually dropped from the peak. You've got to think about that peak of the market in January 2022 was near on $1 million nationally.
That's right.
And then it basically fell right down to 850. And we basically haven't seen that move since the end of 2022. So
Yeah,
we're just coming up to 3 years of 850
yeah,
right down the middle.
which is quite phenomenal. And that's why I guess if you were saving for your deposit, or if you had your deposit ready and you were sitting out on the sidelines, it didn't matter,
Mm,
because yeah, the price of what you were going to buy with that money hasn't changed. It
correct.
is actually getting better. It was deflationary,
Yeah.
and you were getting really good rates of return on that money while it was sitting there. So thinking about the property values being relatively flat here in Auckland, it feels probably a lot worse than in other parts of the country. And there's been a real divergence between property price growth rates, or property prices generally, Why the divergence? Why do you think there's such a difference between, say, the North and the South Island, or big cities and regional areas?
Yeah, it's fascinating. I love watching this because you look at the likes of Central Otago Lakes, which mainly driven by Queenstown and Wanaka, and wow, everybody else is going backwards, and they just kept climbing, 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 climbing. That was the first region in New Zealand to hit the $2 million mark. And at the time, Auckland's around 1.1 million, and that region and Auckland used to dance for the top spot. So they were actually pretty close. Go 3-4 years ago, right? 4-5 years ago now, pre-COVID. But what is fascinating is you see the likes of Southland. That's a really great example. That has bucked the trend again. They have continued to see sustainable, I would argue, growth in that region. There's still some really healthy levels of stock, although they are being snapped up pretty quickly. But then that is one of the most cost-effective regions in New Zealand to purchase homes. And you go, there was a massive shift when we headed into COVID, and there was a significant portion of the population had the privilege now of being able to work from home. And that just never happened. That accelerated that specific type of working faster than I think anything else could have. And so that just opened up a whole lot of options for where people were living, how they were working, and how they were able to get onto the property ladder. I think that's a fascinating piece. I mean, even you look at, there's the likes of people who live in big cities. Before I even knew what I was doing, I was a rent-vestor. I don't know if you've ever heard of them.
Yeah, actually, yeah. Tell me more about that.
I had no idea that I even was one until a couple of podcasts ago, actually. And I said I lived in Auckland. I could not afford to buy, and I bought in Napier as my first home because it was just not attainable for me to it just was not obtainable for me to purchase a home in Auckland, which was where I was living. But I just had this sort of goal in mind that I was like, I must, by this big zero birthday, I really want to own a home. And so, I had to look outside of that. And I do hear a lot of people who are doing that they are going, well, I want to own a piece of property. I want to have my piece of paradise. There is something really secure financially about being able to see your money and being able to know that if all else fails, I have actually got somewhere I can go and, things don't kind of work out. So the micros, I know it's a really long-winded way to say it's fascinating in New Zealand. We have the real opportunity to look at those property investments, if it's in the big city, if it's outside, are we living in it? Are we renting it out? We really have the ability to do that. I mean, we can be skiing in the morning and by the beach in the afternoon, and property is actually not that different either, depending on what it is that you're looking for and how you want to kind of get to your financial goals. There is plenty of opportunity out there in the markets in the different regions.
Yeah, you don't have to do it like everybody else does it, right? But so when you did that, when you became the rent-vestor, so you stayed renting and then you bought a property, effectively you said, I can't get a home that does both, a home to house me and then an asset that will hopefully increase in value. So I'm just going to do one.
Yeah.
And you did that. And when you did that, were you one of the few people like within your circle of friends that was actually doing that? Were most people kind of trying to figure out how to do it themselves to live in it?
Yes. And that was something that everybody told me I was crazy.
Right.
Because it wasn't really done, if you know what I mean. There's sort of this linear path I think we have in our mind around going to school. If you choose to do tertiary education, you do tertiary education, then you buy a house, then you get married, then you have children. We sort of have this, and I know that that's just very stereotypical. So I don't, that's not my belief at all, but I know it's sort of this linear path that I think we all sort of have set in our minds. And when someone kind of deviates from that, and that's what I love about now, I feel like the conversations around doing it outside of that particular linear piece is awesome. There's so many more opportunities for young people. But no, you're right. It was very much you're doing what? Can you even do that? How would you do that? What if, like everybody's very, very confused. And so it was quite, I suppose, revolutionary at the time, but it was just probably that Kiwi ingenuity of going, I really want this, so how else can I do it?
Yeah, and did you live in that property later on, or
No,
was it purely a rental?
And I still have it.
And you still have it?
Yeah,
fantastic.
Yeah, no, never have.
But that would have grown some sort of seed of capital so that you could leverage off that to buy other property later on?
And that's exactly what it ended up doing. I didn't actually set out that way, but again, when you're younger, you don't necessarily know how all these things roll out. But yeah, that decision was a smart one financially for me to be able to then go and speak with people, mortgage brokers and the like, to go, okay, well, this is what you've got, this is how it works, why don't you look at this and this? And I was like, wow, that's cool. And this is much younger Vanessa, but it's, if there are younger listeners out there, I always encourage them, go and talk to somebody, because most people have got no idea how much ability, leverage, and equity they've actually got. Well, not necessarily equity, but definitely leverage, or they think, I'm going to own a house in 10 years. It might actually be that with a few small tweaks, you can own one in 2 years. I think
so I was playing Monopoly over the weekend with my kids, and my younger kid, she was first time playing Monopoly.
Cool.
And I was trying to explain to her the general rules of the game, which was, look, if you land on something, you buy it.
Mm-hmm.
I know you don't know how to play the game yet, but buy it.
Mm.
And to me, that kind of feels like the same thing, right? When you're starting out, you don't know what you're doing. You buy first, you stack assets when you're young, ideally when there's uncertainty in your own world,
Mm-hmm.
and even in the market, in the wide world,
Mm-hmm.
because usually when there's uncertainty, there's the possibility of greater returns. So if you do that when you're young, you figure it out as you go, but you've done the hard part first. You've acquired it. You've put your name to a title, and it really does open up the opportunity. So when you bought that, why that area? Did you have some experience in that area? Did you kind of know it, or was it just completely random, sort of, I'll just pick that one, thanks?
Yeah, it was in Napier, so in a much cheaper area than where I was living, and also I had family down there. So I was sort of went, okay, this makes sense. My family also live in Tauranga, which was actually my second rental property. Because I was like, but that was a little bit more expensive for me in Tauranga at the time, and actually still is. And so I went Napier first, then Tauranga, and then Auckland. And so so it's been. So the reason why I picked that suburb at the time, it was easier for me to sort of help and manage. I had family down there to kind of support me with that decision and the likes. I kind of was very clear about what I sort of wanted. If I'm going to do this, I would love, and my kind of vision at the time was, I'll buy a big section with a house, preferably on the front or the back, so I can build on it. Still haven't done that, but the option's still there. And it was, that was sort of part of the criteria to going, well, okay, if this is an investment, what would I like an investment to look like?
So it's going back to the market now. I know it's 2020, we had a 0.25% OCR. But right before the emergency measures were put in, we had a 1% OCR. And that's always the thing that kind of stumps me when I think about how low the official cash rate will go this time around, because we were already at very low interest rates before the emergency cuts kicked in. So when I look at the state of the New Zealand economy right now, the funk that we have in our collective trunk, it still feels like we need a lot more stimulus. We need a lot more incentive to get out there and borrow money to put it towards property. And I've been speculating fairly publicly, I think, over the last little while around how low I think things will go. But what is your general view around how low the official cash rate will go? Not in the next quarter, but even the next 12 months from now. Would you speculate on that?
Yeah, I think that there is going to be an element of real, them being gun shy after what happened after COVID. I mean, anyone can look at that graph and go, oh man, that's, and Adrian wasn't in the seat anymore. So, I'm not putting two and two together, but maybe we need to put two and two together, So I think that there will be an element of, I agree with you, this tussle with, we need to stimulate the economy. We don't want to do it too fast. The question really is, and I know we can't go back in time, but should we have gone 0.5 quicker rather than 0.25 and then gone 0.5? I think that's kind of really on the minds of Kiwis going, how have we ended up at the end of the year before we had to kind of get some decent cuts? How low is it going to go? My honest opinion is I don't think we're going to get back to. I know you've sort of said, what would happen in negative interest rates? I mean, wouldn't that be a delight? Maybe, who knows? But look, I'm not sure we're going to get right back down to COVID levels, get back to 1%. I mean, I could kind of see that happening in the next wee while. We're at 2.5 now. What are we going to go? It is a long way to go. And I think a lot will be held on the last announcement before the end of the year as well. But yeah, I mean, what could we get to probably another half by first quarter of next year, maybe around that 1.75.
Yeah.
I think that's probably doable in the next year.
Okay. You're on the record now, Vanessa.
There
1.75 by when did you say?
Yeah, another year. So about this time next year.
Oh, okay. By this time next year. Yeah. Still, it's more than what most bank economists will do, right?
Yeah.
And I think the default assumption is that there's some sort of state of equilibrium that we're magically trying to find our way to. And when we get there, we won't know what it looks like. When we get there, we'll know. I don't know. It's quite a weird thing, right? But no one's really no one's really that forthcoming with thinking too much beyond a few months.
Yeah.
And obviously there's professional risk in doing so,
Mm,
and no one really knows, let's be honest.
of
But
course.
when we think even longer term now, and we think about the next cohort of first home buyers that will then turn into upgraders, maybe property investors, and
Hmm.
then downsizers later on, what do you think? Do you think that we're going to see a world where it worked really similar to the last 10, 20, 30 years, where property prices roughly double every 7 to 10 years? Or do you
Mm.
think maybe fundamentally something's changed?
I believe that we're going to continue to see growth because the reality of it is people's incomes do go up, and over time they have the ability to borrow more. Do people inherently want stability? Yes. I think every generation has been said. I remember sitting down with my mum when I was a teenager. She says, "You're never going to be able to afford a house. It's never going to
Is that
happen."
right? Wow.
They are so expensive now. They're like $200,000. Like, goodness, wouldn't that be lovely? So I do think that there is always fear for the next generation. I also inherently, and I am quite the optimist, so, put that hat over me if you will, but I am inherently an optimist in that we always do find a way to get through. It is something that's certainly in our DNA as Kiwis, and I do think it is sort of a focus. I know there's been conversations about digital nomads and people not
Mm.
having a fixed abode and all the rest of it, but inherently people want to belong. They do. Most people, of course, there will be people who are super happy to travel the world for the rest of their lives. But,
Mm.
I do think inherently we do want an abode. I do think that prices will continue to increase at a more sustainable rate. And I think that you always hope that it's in line with incomes as well. We've put in quite a lot of legislation over the last 5 years. You think even DTIs came in just about 18 months ago, so debt to income ratios. So, because of where interest rates are at, once we get down to about 4-ish%, we'll start to really see those kick in because that will be where people will actually be able to borrow the money, but the DTI restriction will limit them. So that I think we haven't seen the full effect of that came in, I want to say July 2023, if I'm not
I think so.
mistaken.
Yeah.
And we've seen shifts with the LVRs and how much you need in terms of deposit before you borrow, and where does that sit with investors versus our homeowners. So I do think that there's going to be quite a bit of there will be shift, but it'll be more measurable shift over time. I think the fact that KiwiSaver has now been, was it 2007? So almost 20 years we've seen KiwiSaver. It's now this generation, I think it's just knowing that that's what you do. Whereas for perhaps my generation and older, it's kind of like, oh, maybe should we? Who knows? We've got a property. So I think it will start to become part of just what you do. And I personally think that should be mandatory over a certain, point. I just think that reduces the risk and the leverage that we have, or that need for leverage that we have as a nest egg for when we do retire on property specifically. And I do think, honestly, we've got so many more options for investments now. You think 5 years ago, it was so hard to invest in the share market.
That's right.
Now you can have $10 and give it a whirl. Download the Sharesies app, or your shares portal of choice, and you can give it a go. There's just so many more options that there is content everywhere to understand the share market. We've just got so many more options now that we didn't even have 5 years ago, and I think that's really great.
That's one of the reasons why I think it's not just a threat or a sense of throwing our toys out of the cot that we can't get into property and the system is unfair. It's a little bit different this time around in that the next generation has options, right? Where they could definitely get into shares or crypto or just, passive funds. And that might scratch the itch. You can't underestimate nesting instincts, which will kick in for some people eventually, and more like emotional sort of ties that draw them back to property later on. And so it's just really hard to figure out, with all these competing forces, which one will dominate.
Yeah.
Thinking about what realestate.co.nz does, do you think that there's going to be a lot more disruption happening in that space? Or do you feel like as a model, actually, if you could just break down how the model works and then talk about kind of what you see happening in terms of technological disruption? Because I'd be quite keen to understand if there's anything on the horizon there.
Yeah, so we inject listings from real estate agents and then we serve them up to the general public or anyone who's looking to buy, sell, rent, or invest. And that's been a tried and true model. Gosh, we started back in 1996 before Google was even around. I always say we had a website, but nobody could find it. It was called Real Ends back then. Because the person who started it had a real passion for split ends. So there you go.
No way. Is that right?
That's correct. Leonie Freeman's her name. And yeah, she absolutely loves split ends. So decided Real Ends was the name of the property portal for New Zealand. And so, look, that's been the way in which we have kind of continued to create our business since 1996 up until today. And we ingest those. And then what we see in terms of our data is what is the sentiment in the market? How motivated are vendors? So how motivated are sellers? Because if there's more sellers this September than there was last September, it tells me that people are more motivated to sell this year more so than they were last year. And you kind of think about, well, what's happening from the economic perspective? Is it an election year? What's happening from an interest rate perspective? What we also see is asking prices. So you put your house on the market and you have a strong negotiation with a real estate agent around, my house is worth $2 million. They're like, well, no, it's actually not. I know Barry might have got 1.8 during COVID, but, up the road, Barry's probably sold at a good time. Let's reset your expectations probably down to around 1.4, And anyway, you might negotiate at 1.5. So that 1.5 goes through to our site, whether you have a price on it or not. So if you're auction or your negotiation, there's a back end part of this. And what that tells us is what is happening with the sentiment of prices. What is the confidence of vendors to believe that that price is what their property is worth? Now, they won't know whether they've met the market until they get it on them, until they list it and they start to get feedback from buyers. And you might go, wow, we've got 5 people who want to buy this house at 1.5 million. Great, let's have a conversation. Let's work out what is the market? Because, vendors or sellers can command anything they like, but they haven't met the market if no one's going to pay for it, right? Someone's still got to put their hand in their pocket, pull out the check and pay for it. So that is where we start to see if vendors are confident and buyers are biting, we start to see asking prices go up. Because then Jerry, who lives up the road from Barry, tells Jenny, hey, I've sold my house. I was hoping for 1.5. I ended up for 1.6. And she goes, oh, great. I thought I'd only get 1.4. I might put my house on the market and I might go at 1.65. So you start to see that trickle-in effect of the asking prices increase and vice versa. I put it on at 1.5. Nobody bite. There was no bites. I ended up selling at 1.2. And Jenny goes, oh, okay. So if I sell my house, that's what I'm sort of looking to pay. So that's the trend in which realestate.co.nz shares. It's the sentiment of what's happening with sellers in the market, what the prices are looking like, and also what buyers are doing. How active are people on our site?
Okay. And sometimes there's seasons where they will diverge and converge, right? In terms of the rate of increase or decrease in prices that people are expecting versus what people are actually getting in the market. That changes over time as well, I would imagine, right?
It does slightly. It's more around what is the news articles and friends saying.
Right. So that's the leading indicator.
It really is. Yeah. It's not so much a seasonal piece. I mean, of course, there's always supply and demand. We call it the open home shoe index. So, how many shoes are outside an open home? Because it's very interesting talking to people who will go into an open home with lots of shoes and they you watch them, right? They're kind of looking around, they're more flustered, they're sort of, because they're thinking, I'm in competition. If I want this house, there's 30 other people here that want it too.
Meanwhile, the agent has their boot still open. It's full of shoes and cookie dough, right? They're pulling out all the stops, right?
I love it.
But it works. So do you think that the way that technology is going, that just showing properties online will begin to absorb more of the sales process?
The reality of it is the world is our oyster at the moment in terms of both buyers, sellers, and how property portals help buyers and sellers. So when you look at it, I mean, Zillow, a massive property portal in the US actually, just this week released a feature where they had built a app plugin to ChatGPT where you can say, hi, ChatGPT, I would like a 3-bedroom house within this area, but I'm looking to develop it, so please make sure there's no sewage pipes that are running through the back garden. Inherently, this is still the biggest transaction people are going to make. We're not talking about denim jackets or shoes here. We're talking about, the house that either somebody else is going to live in or you're going to live in, and probably the biggest transaction. So I think there's going to be an element of where that searching piece starts absolutely is going to get more streamlined, more refined. You're going to be able to get stronger data sets to overlay. I mean, if you're in the US, it's probably a bit, you need really strong filtering systems because there is millions of houses for sale, right? In real estate, I mean, in New Zealand right now, there's about 30,000 homes.
Yeah.
So if you make your search too narrow, you're only going to get two, and you probably don't like either of them. So, you do have to keep it wide. But I think what's going to happen is that that agent, or the AI agent that's going to help you to find the house, you're still going to want to be making sure it's from a trusted source. You're still going to want to be making sure that you're keeping up to date with what's going on with the property data that's trusted, that is helpful, that has been around for a while, that understands the market trends, because I think we've all been the victim of some hallucination. I'm sure it's going to get better.
We're talking about AI here.
Yeah.
Okay.
Good call. Question. So, AI hallucinating robots. And, I think we're always, the battle that AI is going to have is the trust that people have in that, I'll call it an AI brand, right? Their brand, AI, it's going to have some trust issues over time. So I think while it seems, if you look really extreme, there's going to be no need for any companies, no need for any brands, no need for anything. It's like, yeah, but as humans, we inherently want to be able to trust what we are doing, what we're seeing, what we're reading, what we're ingesting. And so I think the role of how we work rather than fight with AI is going to be really important in the future. But inherently, we'll be putting the buyer, seller, renter, and investor at the heart of everything that we do, because the problems that they have got is what we will build technology around to support it. Almost every suburb in New Zealand, we have 10 years worth of what the asking prices are, what the selling prices are, what the average rent is in that area, how many properties were for sale, what they sold. So if you're just interested in, you're thinking like, maybe we could sell in the next 2 to 3 years, go and have a look at your suburb now. Go and have a look at it in 6 months' time. Go have a look at it in 8 months' time. And it will just give you a bit of a flavor for the market, because inherently, when you want to get a real estate agent into your living room to talk about selling your property, you want to make sure you're informed too. You want to, chat about the ups and downs of what's happened in your suburb over the last couple of years. So there is, if you're kind of dreaming, or, even first homing, go and set yourself up a safe search, all homes with 3 bedrooms under 500,000 New Zealand wide, and see what comes up, and remind yourself every time you don't have that cup of coffee that house is just that step closer if you are trying to save. Set yourself up those kind of, name your safe search. My first home's not that far away. And every time you save yourself a coffee, you feel really inspired by looking at what's available out there, because you will be fascinated at houses like I was, outside of perhaps where you live, around what you could actually buy. And it might just get you into that seat of that mortgage broker and go, right, tell me, how can I get one of these?
Let's get started, right?
Yeah, absolutely.
And the value of that with realestate.co.nz is because you can see the sentiment, right? And if sentiment, what did you say before? The sentiment usually leads by actual prices by
about 6 to 8 weeks later. So if the market's moving upwards, we'll see sales follow about 6 to 8 weeks later, and vice versa.
Yeah. That's awesome. Awesome. Well, thank you very much for coming in today to have this chat. Thank you very much.
You are very welcome.